Hey everyone, thank you so much for joining Archangel Alts. And I'm going to get right down to the important topic at hand. We are living in such an important time in history, March 2019, when some of the big stuff that we have been watching and warning and trying to get a rush to launch our site because of is going to start coming in quicker now. So as we look at things like the JPM coin, we look at Facebook coming into the marketplace. We look at backed BAKKT and the Winklevosses, ETFs, all these different things coming down the pike. Venezuela, trying to present themselves as a leader in the way to crypto payments for things. Oh my goodness! Get your Church's Fried Chicken in Venezuela and Subway too. So Venezuela is starting to look more libertarian America than we are. But I would imagine it doesn't quite feel that way to the average person there in person. Anyway, what is liquidity? Thank you for our resources, for our sources that we're posting in the comments area in the description of this video. So you can get there and research it yourself. And I'm not going to go far beyond what's right in front of us because it's not really that difficult to get the information that's necessary. But you must understand the basic economics in order to know what it's going to take for us to have this wonderful marketplace that we have right in front of us, the opportunities that are right here. So, liquidity, the availability of liquid assets to a market or company. The example that they give right here is the banks closed, causing serious liquidity problems for smaller companies. Okay, well, if your money is going through the bank and the bank closes, then you don't have liquidity. Liquid assets, cash. A firm may be unable to pay unless it has spare liquidity. A high volume of activity in a market, okay? All of those are the same thing, but, we're looking at the high volume of activity in a market, but it is exactly the same as liquid assets or cash. If you have $100 of something to sell and somebody wants to buy it from you, and it goes from you to them, and you now earned your $100 and they now have that $100 asset, you could both go and do the same thing with somebody else. You now have $100 for your asset. You could go and wait a little bit and maybe buy the same thing for $90 from somebody else if you wait. And that other person is really glad with what they just got from you, and they have what they considered was a good value at $100, and they may hold on to that for a while, or they may wait and hope that they can sell it when it goes up to 110, and somebody else thinks that that's a good price. So now you have 4 people involved in the buying, selling, trading of something, and all of that it increases liquidity. If you bought your $100 worth of an asset and you hold it, you helped for that microsecond in time. And over the very long term, you are going to add value when it hits a point of critical growth and scarcity. Because you have $100 and you're holding on to it and it's not available. So eventually in a year, 2 years, 3 years, 4 years, 10 years, maybe a few months, if things go amazingly well, you will be in, the increase in scarcity will be such a big deal that everybody's like, man, if people would just take out their early coin, wallets and start trading the stuff, get some of their value out of it, and we could all trade it, then the price would go down just marginally. But otherwise, we got to keep buying up and up and up and up and up and up. And that scarcity model, we have 17 million out of the 21 million that will ever exist of Bitcoin already are in wallets or on the exchanges. So that's a really, really, really big deal. So let's read a little bit more. In business, economics, or investment, market liquidity is a market's feature whereby an individual or firm can quickly purchase or sell an asset without causing a drastic change in the asset's price. Liquidity is about how big the trade-off is between the speed of the sale and the price it can be sold for. Man, is that what we are preaching? Yes, it is. So, if you've been watching the videos, I think that you just please really consider the importance of this. This is one of those things where you look back and try to find the information about it after it's already happened. You say, whoa, head spin, what did I miss? And then you say, oh gosh, I wish I had gotten in. If I knew then what I know now about the price of Bitcoin, about the value of these other good tradable coins in the marketplace, man, I would have done anything to be able to provide that kind of future value to my portfolio. Now, yeah, the worst could happen. If the worst happens to this industry, realize that the current going value is somewhere between $80 and $130 billion. And that really is supposed to be more around 560. Some of that split down with a hard fork just a few months ago, which took it down to about 280, and that 280 has been dropping ever since, which, gives people that are fear-based, or, the sky is falling, CNBC and the other reporting news agencies, their job is to just pound the price and value down until it's buy because of JP Morgan and Facebook and all the other NASDAQ ETF-related stuff, Winklevoss, et cetera, et cetera, et cetera. So liquidity, I've been pointing this out as we trade. I'm going to continue to just, pound the pavement on exactly these topics. This is such a critical time in history. This is not just channel hype. I'm not interested in just, raising temperatures and bringing hype into, this direction. I'll probably continue to say this too. We could just continue to just very quietly, without you having any idea who I am, trade on this method that is doing something at a success rate that does not exist anywhere in any market. So whatever the reason, I'm passing what I know about it on to you. But I have an understanding of the full philosophy behind what's going on, behind the belief system going on, the political and the almost religious side of things, the decentralization and libertarian aspects of things. And I understand the benefit to the marketplace, the capitalization of processes. And we don't want this to be a corporatization, consumerization, corporatism, consumerism, capitalism. The negative sides of those lean towards fascism. When people are saying we want decentralized, they kind of mostly don't understand that what they're really saying is just we don't want fascism. But because the anti-fascist movement on the learning institutions of the world are so manipulated into not really being about historical fascism, but something completely different, I'm not sure they understand the greed and money-oriented part of that. So liquidity. It is the ability to move in the marketplace. And when you have a coin that is too low in value and has too low volume, not enough trading, people are holding. And there's this block that can't move the marketplace. You got a store that's not going to stay open if nobody will buy something from it. And the store has assets sitting on the shelf that are getting old. That is what happens when there's no buying and selling. If everybody's hodling, then there is no future for crypto, period. Blockchain that doesn't have transactions to transact, everything just goes in one direction and then sits. Nope. That will eventually accelerate the back end of the scarcity model. But, it's useless if you don't work on the front end of the model, which is mass adoption. Okay, so market liquidity. Same thing of having, if you have things of value that you can trade, buy, sell, etc., then it's something of health. It's kind of like, if you have blood in your system, and if it wasn't circulating, it would clot and it could cause a stroke. Not a good thing. But the circulation of blood flow is your life force. Same thing with liquidity. And they're both liquids, so that makes sense. So down here in Investopedia, I've already opened up theirs. They're an excellent resource. Makes a lot of sense. So I do not mind fast tracking to making sure you learn things that I've seen from them by just going straight to them. So thank you for your source. What is liquidity? Liquidity describes the degree to which an asset or security, in this case cryptocurrency, can be quickly bought or sold in the market without affecting the asset's price. Market liquidity refers to the extent to which a market, such as a country's stock market or a city's real estate market or Binance Exchange or another high-quality exchange, allows assets to be bought and sold at stable prices. Cash is considered the most liquid asset, while real estate, fine art, and collectibles are all relatively illiquid. Accounting liquidity measures the ease with which an individual or company can meet their financial obligations with the liquid assets available to them. There are several ratios that express accounting liquidity, highlighted below. So I'm going to let you read this on your own. This is just a basic introduction to what I will go ahead and show you now, getting on the Binance Exchange. So over here we have a model. We're currently looking at Steam. We're excited when it goes back up to our 1200 range over here. So here's, the people in the marketplace that are buying. Here's the people that are in the marketplace that are selling. And right now, just to give you a visual, there's a 0.39% gap between these first, this is currently where the value is. And as these things go up in volume and price, it shows you where those will resolve over time. And you can see that, way up at the top, there's more in the sell range, but they're almost perfectly equal. There's a great balance, counterbalance example, like I've been talking in other videos. Woo! So you meet the price that somebody's willing to buy with the price somebody's willing to sell in the most simple of examples, and you come with the price that's in the middle of those two. And as they're resolved, here's your liquidity. Okay, this is liquidity in the process, liquidity in the making, but here's the results of it. But, if you'll notice, it's not like the fastest thing in the world happening right now. Okay, time is standing still right now while we're waiting for the next one to happen. But let's see what we have when we look at something like Ravencoin that has been going gangbusters for a while. It's up to 9,000 Bitcoins in 24-hour volume. That volume is liquidity. So how is it doing right now? Is it moving kind of slow too? Pretty slow in comparison, but you can see it's resolving orders. People that want to buy are getting that satisfied while people are able to sell it off to them. And if it doesn't have exactly what it needs, it's able to say, okay, I've got a little bit of liquidity through here with all the volume of these. As long as those positions remain there, I can find a way to bundle this information together and get it closer to 57 to 58. Okay, 58 sold, 56 buy-in. Okay, 56. Now it's worth 56. How long is it going to take to satisfy the next one? It's going to come to 657. How much does 657 need? Well, okay, that didn't get resolved. So now we're looking to sell slightly lower. I want to unload my 656. Well, that's great because I want to buy in at 655. Okay, well, you bought so much in at 655 that it's now worth slightly more. And the supply and demand just keeps going and going and going. But if there isn't liquidity, then all of this just sits. This valley between the two gets wider and wider, and it gets stuck. And eventually you'll have a buy or a sell wall, a wall that it can't break through. So there's your liquidity in the marketplace. This happening here, and happening on more markets and on more exchanges is what provides value to the market, the trading markets. I mean, especially in the case of cryptocurrency, because it's not like you have a coin sitting on a shelf in a store where you can go and you can buy. Yes, the ATMs are popping up. Yes, they're becoming more physical, manifestations of this stuff. You'll be able to use your phone as a wallet. Where you can store, buy, and sell these things. Eventually, along with mass adoption, I think people will probably be screaming for cheaper and easier and better ways to buy and sell. And so, at some point, things like Robinhood will probably become choices for that. It's, in my opinion, very glitchy, and along with free, you get waiting a really long time for any good positions to happen on Robinhood. Another issue with the entry points, we're going to talk about this, of course, in a separate thing, but one of the problems with the entry points, the portals to your buying and selling your first crypto, other than the fees, is the fact that they're going to focus on the most successful cryptos. So it's automatically going to promote a certain group of coins, while others, have to wait in line to be approved or to be a part of that system. So it automatically gives leverage to coins that, they've already been adopted, and people are going to be skittish, of course, about coming in day trading and, how do I do this thing? People are scared of money as it is. So new money is even scarier. And then trading, buying and selling it, oh my gosh, that's terrifying. So I understand all that stuff. But liquidity is the answer to the mass adoption problem, period. So it means, fast track and simple training people about economics so that they can get over the fear barrier and come and trade. That's really what all of this is about. It absolutely is what all of this is about. So liquidity is the ability to, let's say the current value is 334. Okay. People would often say in economics that volatility is the enemy of liquidity. Nope, 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 nope. Absolutely not. If you're looking for something that you can day trade and you're looking for a good entry point, that's not going to be up here. That's going to be here or here, right? If you want to buy it at a good price, you're going to be looking for, oh my gosh, it dropped. Let me buy it. Well, I mean, if this was a scary point or here, a scary point for liquidity, well, what happened as a result of that liquidity? People bought in. And they may have gotten some value here and sold out. And the more that they sold out, the higher it went. The more they sold out, the higher it went. Okay, now you reach a point of fear. Fear on the buying and the selling side. People are concerned that if it doesn't continue to accelerate, that they're going to get stuck with their coins that they're trying to sell. So they get a little bit less greedy. And some of the people that already bought on the way up are already willing to sell at a profit. People see it going down, they get scared it's going to keep going down until they start saying, hey, wait a second, it's been going down plenty. And the people that know what they're doing already are already kind of setting this limit because they're watching the same indicators as everybody else. So then there's this slight buyback in. All along the way, value, Binance is earning because you're buying and selling and trading, right? People that bought and then sold are earning because they bought low and they sold high. And then as this sells off, this became a new opportunity to somebody to buy in and earn a profit all the way up here again. Circle of life, buddy. So that's liquidity. Volatility is not the enemy of liquidity. Would you like to see a coin like Bitcoin or something do nothing but this? Well, I mean, it's perfectly stable. It's a solid line down. Okay? I'm not talking about what we actually see in the stair stepping of here. Wouldn't you like it to be possible to add value to Bitcoin and to Binance and to yourself to earn something here, earn something here, earn something here? As tiny as that is right there, over several hours, I mean, you could make a profit in 4 different places just from this window, and it was going down the entire time. So when people say, we need to bring stability to the marketplace, it needs to be stable, stable, stable. You just don't understand economics, or you do and you don't mind driving the value down because you're going to buy in the millions when it hits a very low point. And that's a dangerous, dangerous game in this time when Cyprus, when Venezuela, when India, when other countries need to see this kind of opportunity. I'm speculating. As much as we come from humble beginnings, I've got a car and a house and a phone and food and computers to trade on. That might be saying more than some people that really understand volatility and liquidity. So, guys, please take this seriously. Come become a part of the crypto revolution. Help us to be thought leaders in this space. I know that I'm, just some guy with a voice, but I think that you can hear that I got a few ideas in my head, and I think that I'm sounding probably pretty level and logical to you if you haven't already been brainwashed about how you think things are supposed to work, and that they're better in the hands of regulators, better in the hands of governments, better in the hands of big banks. I don't agree with that. I will not agree with that. But I am not a diehard libertarian, okay? I appreciate the sentiments of freedom and decentralization just as much as anybody, and I will push with you in that effort. But I don't want to be blind by any movement. I'm smarter than what I hear from the left, from the right, from the center, from the libertine movement that's inside the libertarian movement. So there is a crypto politico process that we have to learn together, but we have to understand the economics in order to understand the philosophy. We have to understand the philosophy in order to understand the economics. We have to understand both of those in order to understand the politics, economics, philosophy. Boom. All together, you will be a better day trader if you understand these things, and you will see the value in your own trades when you understand that you are not taking from the marketplace. You are giving it the very liquidity that is necessary for its bloodline. So you can either let the blood, curdle and stagnate and cause a stroke, or you can be a part of helping it have a healthy lifeline, good circulation, good blood flow. And as I say that, it looks like there's a micro opportunity brewing with Phoenix. So God bless you guys, and please be a part of the crypto revolution. Okay, come join us. Ask me questions. Get in the conversation. Point our website to other people in the right direction. Come join the community. All right. For now, Archangel Alts out.